Hello guys, welcome to the next World Trading of YouTube channel. So we're going to have a quick review in GBPUSD pair, a setup that I took that failed, but then I had to look for another buy reason to execute my buy entry. If you're interested in getting updates from our trade setups, then you can join the free Telegram community, because this review basically you can go to the free Telegram community and you're going to see the setup that was shared in there. So I just basically want to do a review for the benefit of those in the Telegram community, so that they could also have better understanding to my expectation that I looked forward to for the buy reason. From the weekly forecast, we identify our rejection block from the daily time frame, and we saw how price was respecting that rejection block zone. We can see price gave us the fall to the downside. This was the candle price printed on Friday. And for the previous week that just passed, I told us to expect more bearish movement to the downside, and then we should look forward to price reaction at this daily bullish order block, and then we can frame buy reason to the upside. And what we can see is that we had this extreme bullish order block, and then we also had this other bullish order block. So I told us to trade a bearish movement first to this bullish order block, wait for price reaction before we could consider going more bearish to the downside into this bullish order block. But what we saw was Monday price was very impulsive to the downside, and now we saw then price giving us bullish movements. So we can see the Monday candlestick, we had a very massive bearish movement to the downside, even violating this bullish order block. So on Tuesday, we saw more bullish impulse then to the upside, since what we can see is this movement took out all liquidities, and we had up close candle for that Monday daily delivery. And then we can see Tuesday gave us more bullish movement, and Wednesday gave us this bullish movement further to the upside. And what I saw on Wednesday, in considering Thursday movement, was how this candle took out this buy side liquidity, and we have volume closed below that. So we can see we had liquidity raid. So I expected to see bearish movement to the downside, but since I was seeing bullish momentum to the upside, I was expecting to take bullish move. The bullish move would act as a pullback move before the bearish continuation. So I wanted to take the bullish movement should, in case price possibly continue for the bullish, since volume here closed above this previous day candle. But then price took out the swing high points liquidity and closed below it. So what happened was now dropping to the 4-hour time frame. What I now saw from the 4-hour time frame is how price gave this rejection candles, and looking forward to see how price then is going to return to the downside, since we can clearly see we had this fair value gap, we have this fair value gap, in extension we have this other fair value gap. And then one thing I paid attention to was the delivery that happened on Monday that led to this bearish impulsive movement that took out the sell side liquidity. So basically now we have this inversion fair value gap, because by identification you're going to see that this impulse took out liquidity, mitigated this bullish order block from the 4-hour time frame, and gave us bullish movement that violated this bearish order block. And now we can see price continued bullish. Price swept this high point, took out liquidity. We can see rejection candles. So I expected bearish movement to the downside. So I had this inversion fair value gap in perspective, because from the 4-hour time frame, what we can see is we have this liquidity, this sell side liquidity here, inducement liquidity, because that is the valid pullback. This is the valid pullback. But then when I went to the 1-hour time frame, let's get to the 1-hour time frame. So from the 1-hour time frame, I saw this impulse, this pullback. So basically from the 1-hour time frame, we also have this inducement liquidity. So since I saw this inducement liquidity from the 1-hour time frame, this is a valid pullback from the 1-hour time frame. But from the 4-hour time frame, where we have the valid pullback is this return of price to the downside, because this is the highest candle. Price pullback took out the low and give us this impulse. You can see that these movements are still within this bullish candle. So this is not really a valid pullback. But from the 1-hour time frame, this is a valid pullback. So you see, there are times, that is why I tell the mentorship student that higher time frame liquidity are very powerful than lower time frame. But then I said that we can see that price can take out lower time frame liquidity and then price reacts from that. So what we can see is from the 1 hour, due to this 4 hour fair value gap, I had the notion that price may just return, react at this and give that bullish movement before we have bearish continuation to the downside to possibly see bullish reaction within this inversion fair value gap zone before we can frame any form of further bearish continuation. So now from the 1 hour time frame, clearly we can see that we have this liquidity. So what I did was to identify this bullish order block from the 1 hour time frame and expected to see how price will react to it, and then gives us a bullish movement to the upside so that we can trade price to the upside. And the stop loss was here and we had this as our entry. So what happened was we're going to play price to see what clearly happened, how this setup failed. So let's log this up. So let's play price to see what happened. So we can see price now returning to the downside. So we can see price failed. Price took out the stop loss. Price in for the higher time frame, the 4 hour sell side liquidity. So since I had two zones in view for my entry, what I now clearly did before price actually mitigated this inversion fair value gap. So let's do away with this price delivery, because this was the delivery I saw. This was the candle that took out the stop loss. So I had to now go back to the 4 hour time frame. So when I went back to the 4 hour time frame, basically we have the inversion fair value gap. And then what I saw was this unmitigated wick. So basically, I do tell the mentorship students that open close price also acts as key levels. So we can see now price was reacting at this open close price because this wick is also an unmitigated candle wick, and it is within the inversion fair value gap zone. And basically within an inversion fair value gap zone or within a fair value gap zone, when you drop to a lower time frame, you're going to find out that you have an order block. You can find the possibility of an existing order block within such sponsorship zone. So what happened again, I tried to enhance my understanding and confidence by also going to the 8 hour time frame. And then I saw that the 4 hour time frame and the 8 hour time frame open close price actually coincide. That's a higher confidence for me. And what we can clearly see is this is where we had the last down close candle before this bullish movement that aimed for the buy side liquidity. So I went back to the 1 hour time frame, and before going back to the 1 hour time frame, I think I shared something to the mentorship group, to the free Telegram community, when we saw how price broke through our entry and took out our stop loss. I came to the lower time frame, the 15-minute time frame, and showed them that we had no buy reason here. So there wasn't even a buy reason. If you had waited for a confirmation entry, you would see that you had no buy reason. Yeah. And then price further went to the downside. So a confluence that established more conviction for me was seeing that within the inversion fair value gap zone, we had this bullish order block below the sell side liquidity from the 4 hour time frame. So upon seeing how price reacted here, I went to the lower time frame. Basically, that is the 15-minute time frame. And then I waited to see, basically we trade sessions. Based on sessions, also you can establish a trade entry. So we saw that we had, this is the Asia session, we had bearish movement. London session further gave us bearish movement. So we can see two sessions gave us bearish movement to the downside. So basically I was looking forward to New York session to give us the bullish movement of price to the upside. And, basically what we have is, if price is aiming for the upside, we have this buy side liquidity. This is a drawn liquidity. And then we had this bearish order block as an extended target where price should come mitigate. But, basically I took the trade entry and aimed for the buy side liquidity. And that was where I just closed the trade. So now what we can now clearly see, we've established all that we need to see in the charts. So from the 15-minute time frame, I waited for price delivery. So let's play price to see what happened. So what I saw was how price took out this other candle here. So based on the single candle order block or sponsorship candle, What you can see here is price took out this candle low point, swept this liquidity, and then we had this up close candle. Price further went to the upside, took out this high point, volume closed above that. That was what I saw. So I went to the 10-minute time frame to establish more confidence. But basically then, where I took entry was to see how price returned to this, to mitigate this candle open price, the bullish candle open price. And then we framed the bullish continuation to the upside. So basically my entry was at the return here, and stop loss was at this sponsorship level, the bullish order block identified from the 1 hour time frame, the close price of that, and then targeted the bearish order block here first. That was what I basically did. So I placed the entry there, but then to establish more confidence, to make me have more solid conviction about the movement of price to the upside, I used the 10-minute time frame to look at this, and this was what I looked at in the 10-minute time frame. So from the 10-minute time frame, we have this bearish order block to the downside. So basically now I established that price has given me this change in state of delivery. So we had this change in state of delivery from the 10-minute time frame. And when we drop to the 5-minute time frame, basically I was just trying to be more convinced about my buy position. So we can see we had this fall, price gave this pullback, price fell, we had this impulse. In extension again, price took out this high point, another change in state of delivery. This was more confidences for me to establish this trade. So I stayed more on the 10 minutes to establish more entry reasons. So let's play price to see. So what we can now see is price give us this movement to the upside. So before this bullish movement to the upside, I identified this other bearish order block. I told the subscribers in the free Telegram community that when we have a change in state of delivery from this particular sponsorship zone, we could expect to see a return and then the bullish continuation. So we can see we had that bullish continuation, and price sponsored this bearish movement before we had that bullish impulse. So I also now set another long position here. So I had another long position, and the stop loss was slightly below this fair value gap. So this was where the stop loss was, I believe. And basically then I targeted to see how price was going to sweep this buy side liquidity. That is the ideal draw liquidity. So the first entry was looking at this bearish order block. So let's pay price to see what happened. So you can see then price return mitigated the entry because we have another change in state of delivery here. We had this bearish order block, price gave us a movement to the upside. We can see that candle volume close above the close price of the bullish candle and the open price of the bearish candle. So that is a change in state of delivery. Price further sponsored bullish movement, and then we had a breakout structure. So what we can see is that this is like a flip zone, because meaning supply gave us demand. So price returned back, mitigated that. So let's pay price to see. So that was what just happened, and what we can clearly see is price went for the profit targets. So this was just the setup I shared in the free Telegram community. So, and we can see how that played out. So first we had a position that got raided before now price for the return to the ideal trading sponsorship zone we were looking at and expecting, because I had two sponsorship zones, which was this 1 hour bullish order block, and then in extension within the inversion fair value gap we had this bullish order block, and you can see how price respected that. So I didn't trade on Friday due to the NFP, but then I made an analysis also in regards to that. I went to the 8-hour time frame. Basically also these are time frames I use. So since what we can see is this is the last down close candle that sponsored this bullish movement that took out this high, and what we can see in confluence to that we had this inversion fair value gap. So basically I was looking at, if we're going to have a bearish movement to the downside, then price should trade to this inversion fair value gap or this down close candle before the bullish movement that swept this buy side liquidity. That was my expectation, but though I didn't trade on Friday. So back to the 4-hour time frame. In the 4-hour time frame, we can clearly see that in confluence the 8-hour inversion fair value gap, we can see we have this 4-hour inversion fair value gap. And that inversion fair value gap also is in confluence with this bearish fair value gap. So you can see another confluence, right? So back to now, let's go to the 1 hour time frame. This is how I just dropped 2 time frames. So what we can see from the 1 hour time frame, we had this price here. Just we can clearly just pick the valid bearish order block, but then we can work with this bearish order block. You get it, guys? So then just to the time frame, we established the trading sessions. So let's play price to see what I expected was to see our price return to that inversion fair value gap. And we're going to have bearish movement to the downside. So basically, I sincerely didn't trade, but let's just put on a short position at the inversion fair value gap, and stop loss can be above this Asia session high point. So we have the stop loss there. So let's just look forward to how price may just return back into this bearish order block. That should just be the targets that we can just work with. Basically, I like to trade 1:3, or we could just further send it to the downside to this other price level, this bearish order block. So let's play price to see what happened. So we can see price, and Friday was NFP, so we can see price reacting at this bearish order block. So let's see what happened. Now we can see we are in the Asia session, so we can see the Asia session price delivery. So let's move this so that we can have that in the new day. So because we're now in the new day, 12 a.m. New York time zone. So let's have that there. So we're in the Asia session. So if price is going to drop to the downside, and we can see that break out of the Asia session, we can see the breakout of Asia session clearly. Then what we can just see, we have this fair value gap here. This fair value gap here, which is in confluence to this up close candle before this bearish movement. Let's mark that out. So that is why in the free Telegram community, most times you see just lines on my charts. So because I know what I'm looking at, the sponsorship candles. So basically now we can just set a long position here, and we can have the stop loss just below this down close candle before the bullish movement to the upside. So let's have that there. Let's move it here, and we can target where we're looking forward to see price return to before we have bearish movement to the downside. So let's play price to see. Okay, so we can see now London session. So this is the Asia session. London session took out the Asia session low. Now we can see bullish price to the upside. So let's see what happens. So we are still in the London session. Now we can see how London session took out this high point. Price returned to mitigate this zone, the down close candle before the bullish that took out this high point. So let's play price to see what happened. Price for the dip lower. So we can see this was what happened during NFP. So we can see how NFP returned back into the 8-hour inversion fair value gap. Clearly we can see that. Anyway, pricing trigger our entry. It's not bad. Actually, I told you guys I didn't trade, but I just made an analysis that day, but I didn't trade it. So we can see it here. At times I just try to stay away from news due to the rules in most of the pro firms. We can see that from the 4-hour, our price returned here. So let's go back to the 15-minute time frame. So we can see that return 4. So we can see we have this bullish order block violated to the downside. If you want to take another position, you could consider to take a short position here. So let's see what will happen. Short position at that mitigation block. So let's have that here, and the stop loss can be just above this candle wick, but that's actually very long. But that's a huge stop loss, and then we could look forward to price sweeping this sell side liquidity. So let's play price to see. All right, so that was just all for the delivery on Friday. So basically, this is just a very quick review, guys. So cheers and God bless you all.